Hi everybody, Alex Deployer from Expert Forex, and in today's video I'm going to show you how I select winning strategies. And there are millions of strategies out there. There's all kinds of techniques, and I'm going to give you some ideas on how you can best select the very best strategies to use for your own trading. Now on your screen there you can see a mathematical wizard. All the numbers are coming out there, and maths plays a major role when you are evaluating an investment, which is your trading account, comparing it with the risks that are involved and the gains that you're going to make. So there's always maths involved. You can't just trade any account size and wing it that way. So maths plays a big role, and I've been very lucky. I studied probability theory in my university courses. I've been a chartered accountant. I've worked for corporate finance organizations. So I'm very mathematical orientated, and that is the way I look at strategies and risk and reward. But I'll give you an idea of what to do. And if these concepts are a little bit trickier to start with, then just re-watch the video a couple of times and the concepts will start making sense. Now, the idea for this video actually came about a while ago when there was a post in our paid forum, and I'll just read the post very quickly. It says, a question for the experts here. After doing an optimization run, we are left with a set of results and 6 columns in the optimization tab. Now, the last 2 columns are drawdown in dollars and drawdown as a percentage. Out of these 2 columns, which is the most important figure to focus on and why? Really good question. Sometimes people don't ask those really critical questions. And I then went ahead and answered that particular question, and I'm going to go through this in the rest of the video. The other reason why I'm making this video is that we are going to be starting a linked account service, and you will be able to link your account to traded versions of our robots, and only the successful ones, and you will need to decide which strategies are best suited to you. And on your screen you can already see there's 13 strategies that are doing pretty well that you can select from, and there's a lot of information provided in those strategies. There's the total gain, how long the strategy's been running, monthly gains. We converted the total gain to monthly to make them comparable. We've got the starting capital, the recent equity, in other words, how much has it grown over the period that it's traded. Then we've got a one that I'm going to be talking about today. Is the gain on drawdown percentage, and that looks at the drawdown that is incurred compared to the gains that are incurred. And drawdowns can be regarded as risk. So in other words, how much risk, how much drawdown are you prepared to give the trading so that you can make the gains that are generated? And if the drawdowns are bigger than the gains, obviously that's a bad strategy. But if the gains are way bigger than the drawdowns, that is a great strategy, and that's one of the points I'm going to be making in this video. Then we looked at the various currencies or instruments that are used, which robots are being traded, the leverage for those particular accounts, and then the brokers that are being used. So we provide a lot of information for you to have a look at these options, but there are also links. So if you click on it on any of these links, it drills down to the FX Blue account, and you see the most amazing details. You'll see graphs of that trading. You can see whether the equity graph is smooth, and you can also look at the drawdown details and things like that. Now this page is completely open. Anybody can have a look at it. You don't have to be a paid member of the forum. So I have supplied the link at the top of the chart, but I will also be supplying the link in the description of the video as well as in the first commentary. So go and have a look at these options. Okay, so let's have a look at one of the best investors that there ever has been, who is Warren Buffett. And here's a quote from him, and it says, "Risk comes from not knowing what you're doing." So in other words, It's a very funny way of saying if you do your homework very well, you can reduce the risk tremendously in any financial decision. Also, you won't make bad decisions because if the risk is too high, you'll just walk away from the investment. So analyzing your options is a very critical skill that you need to develop when looking at many trading alternatives. The other thing that's really problematic is that experienced traders gather a lot of baggage, and as you can see on that picture, they carry that baggage around for the rest of their trading career. And one of the biggest baggage things that happen is the drawdown percentage is equal to risk. People look at statistics about a technique and they say, oh, the drawdown percentage is too high, therefore the risk is too high, I'm not even going to look at it any further. Drawdown is important, but it isn't necessarily a disqualifying factor for a successful trading strategy or trading robot. Okay, so let's start looking at my answer to the forum member, and I'll just read my answer and then I'll explain it in a little bit more detail. So what I say is a drawdown of $1,000 as a number is totally meaningless on its own, totally meaningless. You need to relate the drawdown to something. So sometimes account size is used. And so a drawdown of $1,000 is not that much if you're using a $100,000 account, because that's only 1% of the total account. Whereas a drawdown of the same drawdown, $1,000, is very bad if you're only using a $2,000 account, because that's 50% of your account. So drawdown, in fact, can be manipulated because you can change the account size and manipulate it to the drawdown percentage that you want. And this is a fact that a lot of inexperienced traders don't appreciate. So what this means is that if you have a small drawdown, you can actually use a smaller account, and if you've got a bigger drawdown, you have to use a bigger account, and I'll go into that right now. So in the example that I mentioned earlier, here you can see an account size of 100,000, the drawdown is 1,000, and therefore it's 1% of the account. The other example was the account size of 2,000 and the drawdown of 1,000, and it's 50% of the account. So again, drawdown on its own means nothing unless it's related to the account that you're using. Now, in the top case, this drawdown of 1,000 on a $10,000 account actually means, hey mate, your account is way too big, and it's very inefficient. So there's a lot of information that comes out of these calculations. In fact, the trader that's trading 100,000 with a 1% drawdown might never have a margin call ever, but they're using an account that's way too big. So how do you manage the drawdown? So let's say you are happy with, let's say, a 10% drawdown, and that's how you manage it. You say, all right, the drawdown is $1,000. Therefore, if I'm happy with a 10% drawdown, I can have a $10,000 account. And that's what I mean by manipulating the drawdown percentage to your needs. And that's what people that look at strategies and say, oh, the drawdown is too big. That's all you have to do. Just increase your account size and your drawdown percentage will come down and you'll sleep a lot better in the evening. Now, but the problem with all of these calculations in particular is they ignore your gains. So they only relate drawdown to the account size. So the next step, and this is where the big jump is, this is a conceptual jump where more experienced traders know that drawdown represents risk and your gain should be related to the risk that you're taking. So let's go and have a look at that. So here I go back to my answer to the question, and I say you can also compare drawdown to gains made. Drawdown can be seen as risk, and I find this more meaningful from a personal point of view, and that in fact is how huge financial decisions are made. They compare risk with gains. So $1,000 drawdown, if you have gained $10,000, is very good. You've actually had 1,000% return on your risk. You've risked $1,000 and you've made $10,000. Now that's the kind of ratio that people start looking for. But if your drawdown was $1,000 and you only gained $100 on that particular strategy, it means your gain is only 10%. So it's way less efficient than the technique that earned 1,000% on the drawdown. And that is why I find this calculation so much more meaningful, comparing drawdowns to gains made. This calculation also cannot be manipulated that much because it is a true efficiency calculation. It tells you how efficient the trading strategy is that you're using. Okay, so let's have a look at the numbers again. So if your gains are $10,000 and your drawdown was $1,000, you've effectively had 1,000% gain on your risk, on your drawdown risk. 100% gain would be $2,000 and 1,000% gain would be $10,000. So that is the kind of strategy you want to look for that has these fantastic returns on risk. So let's have a look at the other example. If your gain is $10 and your drawdown was $1,000, you've made 1% on your risk, and that obviously is a terrible strategy to use compared to the first one that I've mentioned. Now, as I said, this cannot be manipulated because this is an efficiency ratio. It tells you how efficient the trading system is. And so all you need to do is set standards for this ratio. So an example of a strategy would be, don't look for strategies that have less than 100% gain on risk, where risk represents your drawdown. And once you've found those, then choose the very best strategies that have much bigger than 100% gains. Now, financially, this seems more logical because you have got to the heart of the trading. You found the efficiency ratio that makes the most sense. Now, if we look at this list with this new knowledge that we have, the gain on drawdown, you can see the efficiency of the listed accounts, and you can see that some have over 1,000% efficiency. There, some have just over 100%, but again, it's a tool that will help you evaluate the efficiency of each of these traders that have linked their accounts through this service that's being delivered. Now, there are other factors that you need to take into account. You need to take leverage into account. You need to take the type of account that you're using and the starting capital. Starting capital is very important, and one of the things that we are doing is we're doing software that will evaluate your account against the signals that you're receiving. So if your starting capital is too low, it won't trade. If your leverage is not right, it won't trade. So that's one of the we're taking the linking service to a new level with this particular offer. But the first step actually, I've shown you the other two steps, but the first step actually is to compare the gains that are made to the amount required in your account, because that is traditionally the ratio called return on investment. So if your account size is $10,000 and you've made gains of $1,000, you've had a 10% return on investment. But if your account size is $10,000 and your gains are $20,000, then you've made a 200% return on investment. And return on investment is one of the key ratios, not the only ratio, but one of the key ratios a large investor will consider when making a large investment. How do you manage the return on investment? You only look for strategies that give you a good return on investment. And that could be anything by your own standards. Like 10% a month is pretty high, but you could be looking at that kind of investment. And once you've got that standard of 10%, let's say, and you suddenly find one of 15% or 20%, then those investments become more attractive. Now, the other thing that I haven't spoken about is obviously the time it takes to make the gains. So you'll see that some of our calculations take this into account and allow you and they allow you to make that kind of comparison. But by now you should be realizing that financial decision making is a skill that is required if you're going to be investing in trading instruments or in trading accounts. as our new service is offering. Now let's look at these results again, and that's one of the reasons why we provide those key ratios. So the monthly gain takes all of the strategies and puts it onto a common level that's easy to assess. You can't just look at the total gain and say, oh, I want to trade for that one. That one might have been trading for 2 years, whereas there might be a better one over a 6-month period. So there we have a ratio that is pretty important, the total monthly gain, and that is a return on investment percentage. So if you started with $10,000, you've made a gain on that first item of 33% in that particular month. So it's a very good measure. Again, if you've used less, it will show the gains according to the smaller capital that you've used. So there's the monthly gain column, which is very important, but also the gain on drawdown, which is very important, that you should be studying and comparing those. Now, details about our linking service are currently available on our paid forum. They are open to the public. At the moment, there are no restrictions. Anybody can go and have a look at this particular section at the moment. We haven't launched it. It will be launched at the end of August or in the first week of September. But there you can go and have a look at the accounts you can link to, the details of the actual service, and you can have a look at some feedback that other members have given regarding the service. Also, an opportunity that has come out of this is that if you have a trading account that is meeting those ratios pretty well, then please submit those accounts to us so that we can offer your account to other traders. There will be a financial incentive to do that. Now, the good thing about this new service is that it is free to members of the paid forums. Now, the paid forum, as you've seen earlier, has 14 or 15 benefits in it, and one of those benefits is the link service. So the cost of the forum is as low as $17 a month when you're using the annual plans, and on a monthly basis is $39.95. Now, these numbers I'm quoting could go up at any time, so don't hold me to those numbers. But once you have enrolled, the subscription will never go up again. So if you've enrolled at, say, $30, that's where your subscription will stay for the rest of its life, even if there are big increases after that. If you want to enroll for the forum in anticipation of the link service, now's a good time to do it to beat any possible price increases. Now, I hope you've enjoyed this video, and I hope you've learned a little bit about which ratios are so important to make decisions regarding investments in trading accounts or trading instruments or in strategies in the future. You really need to consider your return on investment and also your return on risk as shown in this particular video. So from me, Alex Aploy, cheerio.